But then why are you so aggressive with your numbers? You must be confident about something.
Yes, I'm confident that any car maker facing the kind of problems that Tesla is, which is A, they've got the oldest model lineup in the industry. On a weighted average, Tesla's entire model lineup is 6.6 years old. There isn't a car maker in the world that is taking the risk of having a model lineup that is over 4 or 5 years old at the most. So they're the oldest in the industry, which means they have the least pricing power at a time when competition is heating up dramatically. And B, they've got a CEO that has a toxic impact on the brand and it's causing customers to walk away.
You're watching Outliers. I'm your host, Mike Allen, and today we're talking to Brad Munchin. His forecasts for Tesla are more than 80% below consensus. He was bearish on Tesla long before the recent backlash. He's an automotive long-short fund manager with more than 2 decades covering global auto stocks, and he publishes the Motorhead newsletter on Substack. I'll put the link in the description below.
Okay. So I know you don't believe Elon Musk when he promises supervised full self-driving robotaxis will be operational in multiple American cities by the end of this year. What if he's right this time?
If he's right this time, he'll be going up against Uber and Waymo. Well, let's say Waymo and Uber in that order. In some cities, Waymo and Uber actually do collaborate. So he's behind the rest of the competitors out there. So I don't imagine a robotaxi fleet being that profitable for Tesla. And mind you, to be right this time means that FSD needs to improve its capabilities probably by about 1,000 times. So it's very difficult to see him being right this time. But let's say he is, he faces another really, really uphill battle to gain the ground that Waymo, which is the de facto standard now, has already gained for itself.
Right,
And I don't know if you heard, but Waymo just entered a partnership with Toyota Motors. So Toyota will be making platforms for Waymo cars that are either personal vehicles that can drive autonomously or for their robotaxi fleets, which currently use very expensive Jaguar I-Pace EVs. And if they start using Toyota's platforms, it'll be much cheaper. And that's what Tesla's claim to fame is. They'll be making the very low cost hardware, which they claim they can build at $30,000 per cyber cab and have the autonomous capabilities of full self-driving, which so far are not very useful because they can only drive about 36 miles before needing human intervention.
right. So Elon's claim that they're 30, 40% cheaper than Waymo is actually no longer true then.
Well, we don't know because Tesla has yet to show any form of viable autonomous driving capabilities. According to the FSD community tracker, it's a crowdsourced database because Tesla doesn't disclose any data themselves. You've got people who use FSD beta to collect all the data they've taken, and it shows that they can only drive about 36 miles in the city before needing to take over because it's about to crash into something.
A lot is riding on Tesla's new affordable model. You write that this could be a disaster. Why are you so negative?
First of all, the problem that Tesla has had ever since 2020 is that they didn't have any new models in their pipeline, except for the Cybertruck, but that can only be sold in North America, so that doesn't count. And it's a complete flop anyway. But they have not launched a global new model since 2020 with the Model Y. And the 4 models that they already have that they can sell globally, which are the models S, X, 3, and Y, have not been through any full model changes, even though they desperately need them. And in the auto industry, full model changes are de rigueur. I mean, you have to have them in order to keep a model lineup alive. And Musk thinks that that's something that only legacy car makers waste their time and money on. Teslas can be renewed just via over-the-air updates to its software. Well, that doesn't work, and it shows now because prices are down around 30% since their order backlog ran out in Q4 of 2022, and they started this massive price-cutting campaign. And so the problem is that with no new models, even though they like to thump their chests by saying that the Model Y is the best-selling model in the world, the problem is that it's only the best-selling model in the world after all these years because they're cutting its prices dramatically. The Model Y's prices are down like over 20%. The new one that they just gave a facelift to is a flop right out of the door. After 1 month on the market, they're already using aggressive zero interest loans for 5 years in China, 0.99% loans for 3 years in Europe, and 1.99% loans for 6 years in the US. So if you have a refreshed model come out and it needs incentives after just 1 month in the market, you're facing serious problems. And it means that your model lineup is looking stale to the average consumer, and that's why they're in trouble. So this affordable model that they're launching is going to be a stripped down Model Y. Now, if the original Model Y isn't selling well and they need to use aggressive financing programs to move the metal, this affordable model has a very, very high possibility of either A, being a complete flop, no interest because it looks exactly the same as the Model Y now, or it's actually a better deal because it's a quote unquote affordable. I imagine it'll be at least $10,000 less than the existing Model Y, and it proceeds to completely cannibalize sales of the newly refreshed Model Y that is not selling that well. So it seems to me like a disaster either way.
Their total sales in Europe are even in April look like they're down 50% again. That's
Right.
crazy.
We've got pretty much everybody reporting now, and as of now, among the countries that have reported, they're actually down 52% year on year as of April. This is after the refreshed Model Y was on the market, and sales are down 52% year on year in April in Europe. And that's compared to a 37% decline just in Q1. Q1, they could have blamed on, well, we had to have downtime at the factories worldwide to retool for the facelift of the Model Y. And that was true. But the point is now the model's out. It immediately needed incentives, and it's down 52% year on year in Europe. And the reason why is that A, like I said, it doesn't really help to sort of do a facelift for a car that's 5 years old. It needs a full makeover, not a facelift. And that's part of the reason. The other more significant reason is that the Europeans hate Elon Musk more than the Americans do. And he's promoted the right-wing AfD party in Germany, which last week was deemed as an extremist racist party by German intelligence and therefore cannot be included in the cabinet. So it's a very serious issue. And when he started helping the AfD, and when he still continuously tweets, just even over the weekend, positive things about the AfD party in Germany, and this just irks the Europeans more and more. And this is why you're having a stronger reaction in the downside in Tesla sales due to Elon Musk in Europe than you're seeing like in the rest of the world.
So you think this is more to do with his political involvement than just the fact that he did crazy gestures?
I would say it's about 40% due to his political antics. I would say it's probably another 40% that Tesla's model lineup is too old and people are tired of it. And then I would say the last 20% has to do with the fact that there is pretty much for the first time actually decent competitive EV models on the market that give people who are disgusted by Musk's political antics a very good alternative choice to go to if they don't want to be seen driving a Tesla and support Elon Musk's car company.
This is a good segue into another question I'm just going to ask. There's rumors or there's been reporting that the board actually started a search to replace Elon Musk. They've denied that. But what do you think? If I were on the board, I'd be concerned about this guy's judgment.
Well, first of all, Tesla's board is there for one reason only, and it is to rubber stamp anything that Elon Musk wants to push through the company. And they're there just for decorational purposes, and they're made up mostly of friends and family. So it is probably one of the worst forms of corporate governance you can find among any S&P 500 company. And the fact that they're looking for somebody else, which I believe, I don't think the Wall Street Journal literally went out there and made up the story. I think they found some good sources. And I think the fact that for the first time ever, they've gone against Elon Musk's rule at the company is that they are seriously worried about their pocketbooks. It's a damned if you do, damned if you don't type of situation for Tesla's board right now. And they're damned if they don't find a replacement to Elon Musk because the stock price will go down anyway as the sales fizzle out and they start burning cash and blow a hole in their balance sheet. And B, they're damned if they do get rid of him. And if they don't get rid of him, the car maker burns down, the stock price goes down. If they do get rid of him, the stock price goes down because without Elon Musk at the helm, all the retail investors, all the momentum investors who love Tesla's stock because he was the ultimate stock pumper of Tesla the biggest stock promoter we've seen in our lifetimes. And if he's gone, there's just no reason to be invested in Tesla, is what the consensus belief is among the retail and Tesla fans who invest in Tesla.
So you think it's going to go down no matter what? It's a problem that will be solved after it's too late.
Right. And one of the interesting tidbits that came out of this article from the Wall Street Journal last week was that they spoke to someone who showed them text messages from Musk. It was one of his confidants who said that Musk actually wants to leave Tesla. And they quoted him. And he actually said, especially because he got his $55 billion bonus award revoked by the Delaware courts, he's saying, I don't see why I'm wasting my time here when I don't even get paid. And I believe that. And you can tell. Ever since he acquired Twitter in 2022, he's been a derelict CEO. So it makes total sense that he wants to leave. And it makes total sense the board wants to somehow find a replacement, hopefully somebody who can be as good of a stock promoter as he is without tainting the brand the way he is. So both things make sense, which is why I believe the story. And I think that they came out and said, no, they denied the story. But mind you, they didn't sue the Wall Street Journal. So whenever Elon Musk lies, which he does a lot, when the press catches him doing something unsavory, he'll always come out and say, oh, they're lying. And I've got records of him saying, oh, they're lying, and then actually what the press reported coming true months later.
So Tesla doesn't have a PR department and they spend almost nothing on marketing. So how do they fix the brand?
They can't as long as Elon stays there and has his 13% stake. People who hate Tesla because of Elon, I'm talking about institutional investors, pension funds and stuff like that. They're slowly starting to pull their money out of Tesla. And if you look at the top 10 shareholders list, it's very hard to find any actively managed institutional investors in the top 10. It's mainly made up of passive investors like Vanguard and BlackRock. So you'll have fewer and fewer institutions going in there. And I think it's because of the fact that they don't want to have anything to do with Musk as a stakeholder and actually on the board.
Right. How big of a problem are tariffs going to be for Tesla?
The tariffs are going to be very serious for Tesla. They import lithium iron phosphate batteries from China, and they use that in their energy storage business, which sells something called megapacks, which are commercial use energy storage devices that have huge scale. And they also use them in something called power walls, which are for anybody who has solar systems on their roofs. They can store a ton of energy just in their home. So these two products have been growing insanely for the past 2 years. I think they more than doubled their revenues last year and made up a whopping 15% of gross profits in 2024. Now, these LFP batteries that they import from China for these energy storage products make up roughly 30% of manufacturing costs. So if they get taxed, well, if the tariff on that goes up to 148%, which it would, given that it's a battery from China, this will lead them to generate losses, probably either from the second quarter, which we're in right now, or next quarter.
Losses in the energy business or losses altogether?
Altogether, because they're barely making any profits in the car business. In fact, if you stripped out the regulatory credits that are 100% profit margins that they collect from other car makers every quarter, because the other car makers can't sell enough battery electric vehicles, they buy these credits from Tesla. And if you strip those credits out, Q1 of 2025 was the first quarter, I think, in about 5 years since Tesla has generated a loss with X credits.
They talked about manufacturing these batteries in the US, but then they have to import the equipment from China. So it's going to be more expensive anyway.
Yeah, so the whole deal was they were supposed to last year use old equipment from the Chinese battery maker CATL, CATL, and they were supposed to use the old equipment from CATL in Nevada and make the LFP batteries there. Now, that didn't happen for some reason, and now they're trying to rush it to happen. And they didn't say LFP battery sales, but they said that the tariff will have an impact on their battery storage business in the US, and that CapEx would probably be impacted as well. So what that means is that the equipment they were going to import from CATL in China is now going to be heavily tariffed. The CapEx will be more than expected. And although they didn't say it, they did note that their profitability would be impacted in the energy business because of the China tariffs.
Right. Even if your profits are the same, though, and your CapEx doubles, that's pretty prohibitive. They may not even decide to do this.
They sort of have to. Keep in mind, they also have obligations to the customers, right? They've got orders to build out a lot of these energy storage farms that these customers have. So they've got commitments that they have to fulfill. And if they have to cancel those commitments, I believe they would have to take charges. So it's do or die on an existing portion of deferred revenues that they have, or they make them at a loss, which is also bad for them as well.
Wow. Okay. The last 10 or 11 quarters, they've missed consensus forecasts by like 17%.
It was their worst quarter in 5 years.
Okay, but what struck me the most in reading your research is that your forecasts for the next 3 quarters are somewhere between 75% and 90% below consensus. What's going on there?
The consensus estimates for Tesla move very slowly, and they usually move only after their Tesla reports their quarterly deliveries and after they announce their quarterly earnings. So until then, it's moving sideways, and then it boom, once the bad numbers come out or once the good numbers come out, then they move. So that's what consensus is like for Tesla. And mind you, over 50% of the analysts covering Tesla are not auto analysts. So you have to ignore what consensus is thinking and just look at what's going down on the underlying data that you can see in monthly sales and say everywhere in the world except for North America.
And I'm not an auto analyst either, but I can look at sales being down 50% in Europe in April, and I know their profits are not going to be up this quarter, right? I don't need to be an auto analyst.
Well, no, I mean, first of all, this is the first month of the quarter. And what you have to remember is that Tesla sells on average about 50% of their cars in the last month of the quarter. So it's too early to judge what Q2 is with a lot of accuracy after only 1 month of data is out.
Sure, but again, if they're down 50% in 1 month, it's math, right?
Well, the two biggest markets for Tesla are the US and China in that order. And we don't have any disclosure from the US, and we have disclosure from China, although it's becoming harder and harder to see what's going on there because they just started up their second energy storage factory in Shanghai, and that started shipping at the end of March, and it totally distorts what's going on with the automotive business. So it's very tough to tell just from Europe.
Okay, but then why are you so aggressive with your numbers? You must be confident about something.
Yes, I'm confident that any car maker facing the kind of problems that Tesla is, which is A, they've got the oldest model lineup in the industry. On a weighted average, Tesla's entire model lineup is 6.6 years old. There isn't a car maker in the world that is taking the risk of having a model lineup that is over 4 or 5 years old at the most. So they're the oldest in the industry, which means they have the least pricing power at a time when competition is heating up dramatically. And B, they've got a CEO that has a toxic impact on the brand, and it's causing customers to walk away. He's a complete buffoon clown who should just step away from the brand.
Is there anything that could happen that would make you bullish on this stock?
I think it would be really bullish, although it would hurt a lot of people to have a very experienced, competent automotive executive come over and take over Tesla. It would be really good because you would A, get rid of the toxicity that exists by having Elon Musk there and nobody wanting to buy the cars. And B, I think if you had the right automotive executive on board who would say, okay, what are the problems? Well, the problem is that they've got this old lineup that's not going anywhere, constantly needs incentives and price cuts. So how do you right size that? I think the first thing that needs to be done is to probably get rid of a couple of factories that they built recently. So the German factory, they obviously don't need that because it's actually more profitable for them to ship cars from China to Europe. And the Europeans hate Tesla right now. And then they need to desperately finance. So they need to do a very dilutive equity offering, take on some debt, and right size the ship, which means reduce some of the capacity of the Model Y, which makes up 67% of their global production capacity. You don't need that much for one model. It's in fact really risky. And then roll out some new models. Now that's going to take time. That's going to take probably around 3 or 4 years at minimum. And once you get that done, then you've got a great brand with a new CEO. Elon Musk's out of the picture. You've got some new models in the pipeline. I think that would be very bullish for the company.
Great, but then what would the appropriate multiple be if it became a normal company?
Given that it's an EV maker, if you get rid of Elon Musk, the Tesla brand is, I would say, quite valuable. I would say the appropriate multiple would be something like 20 times earnings in the long run.
Right,
That's a very aggressive valuation if they can get back to, I would say, at least 15% operating margins.
right. Great. Well, thanks a lot. That's been very helpful. And you are an outlier.